Worried about inflation eating away at your wealth? Don't panic. Let's explore the best investments to protect and grow your money during these uncertain times. Hey everyone, welcome back to the Economic Survival Guide. Today, we're tackling a critical topic for anyone looking to protect and grow their wealth: investing during inflation. Not all investments are created equal during inflationary periods. Some thrive, while others falter. In today's video, we'll dive into the types of investments that perform well during inflation, from real estate and precious metals to certain stocks and inflation-protected securities. Plus, I'll share how to build a diversified portfolio to navigate these challenging economic times. Before we dive into specific investments, it's important to understand how inflation affects different assets. Inflation reduces the purchasing power of money, meaning it takes more dollars to buy the same goods and services over time. Let's see how this impacts various types of investments. Fixed income investments, like bonds and savings accounts with fixed interest rates, generally lose value during inflation because their returns don't keep up with rising prices. If you're holding a bond that pays a fixed 2% interest rate, but inflation is at 5%, your real return is actually negative. Real assets, such as real estate, precious metals, and commodities, tend to hold or increase in value during inflation because they have intrinsic value. Inflation-protected securities, like Treasury inflation-protected securities, TIPS, are designed specifically to shield against inflation by adjusting their principal value according to inflation rates. Now, let's explore these asset classes in more detail to understand why they can be effective during inflationary periods. Remember, the key is to focus on assets that can maintain or grow their value even when prices are rising. Real estate has long been considered one of the best investments during inflationary periods, and for a good reason. Real estate is a tangible asset with intrinsic value, meaning it's not directly tied to currency fluctuations. It's always in demand, regardless of economic conditions. Rental income from real estate can increase with inflation, offsetting rising costs. For instance, landlords can raise rents to match the increased cost of living, preserving their income and protecting their investments. Additionally, property values tend to appreciate over time, especially during inflation, due to increased construction costs and limited supply. There are several ways to invest in real estate: residential properties, commercial real estate, and real estate investment trusts, REITs. REITs provide an easy way to invest in real estate without direct ownership and often pay dividends, providing a steady income stream. Real estate also offers diversification benefits, as its performance is often uncorrelated with stocks and bonds. This means that even if the stock market is volatile, real estate might remain stable or even increase in value. Plus, using leverage, borrowing capital to increase potential returns, becomes more attractive when inflation reduces the real value of debt. With inflation, the value of money owed decreases over time, effectively reducing the cost of your loan. Investing in real estate isn't without risks though. It requires a significant initial investment, and properties can be illiquid, meaning they aren't easily converted into cash. But if you're looking for a tangible asset that has historically weathered inflation well, real estate is a solid choice. Precious metals, especially gold and silver, have long been viewed as safe havens during inflation. They're reliable stores of value, maintaining stability when fiat currencies lose purchasing power. When inflation rises, the value of money decreases, but the price of precious metals typically increases, offering a protective effect for your portfolio. For example, during periods of high inflation in the 1970s, gold prices skyrocketed, providing a hedge for investors against currency devaluation. You can invest in precious metals through physical assets like gold and silver coins, ETFs that track metal prices, or mining stocks. Each option has its advantages, from liquidity to potential growth. Physical gold and silver are easy to buy and hold, but storing them securely can be a challenge. ETFs, on the other hand, offer liquidity and ease of access without the need for storage. Mining stocks can provide additional upside potential, especially if gold or silver prices increase, but they also come with company-specific risks like management issues or operational problems. So, research carefully before investing. While inflation can challenge the stock market, certain types of stocks perform better than others. Focus on companies with strong pricing power, stable cash flows, and business models that can adapt to rising costs. Consumer staples stocks, companies that produce essential goods like food, beverages, and household products, tend to do well because demand remains steady. For example, companies like Procter & Gamble or Coca-Cola can increase their prices without significantly reducing demand, maintaining their revenue streams. Utility stocks, which provide essential services like electricity, water, and gas, also perform well, as they can pass increased costs to consumers through higher rates. Commodity stocks benefit from rising prices for raw materials. Think about oil companies, mining firms, or agricultural producers. They often see their profits increase as the prices of the commodities they produce rise. Technology stocks with inelastic demand or substantial pricing power, like Apple or Microsoft, can maintain revenue growth even during inflationary periods. REITs, which invest in income-producing real estate, also do well during inflationary periods due to their ability to increase rents and pay dividends. Their dividends can provide a steady income stream, and their capacity to adjust rents upward with inflation helps maintain their profitability. Healthcare stocks, like those of pharmaceutical companies or healthcare providers, often perform well because people will always need healthcare, regardless of inflation. These companies have the ability to pass on cost increases to consumers or benefit from government reimbursements, making them another potential hedge against inflation. Inflation-protected securities are designed to shield investors from inflation. TIPS, or Treasury inflation-protected securities, adjust their principal value based on changes in the consumer price index, resulting in higher interest payments when inflation rises. I-bonds, also offered by the U.S. Treasury, provide a fixed rate of return plus an inflation rate that adjusts semi-annually. They're a low-risk way to preserve capital and earn a return that keeps pace with inflation. While TIPS and I-bonds are excellent tools for preserving wealth, their returns are usually lower than other assets in a low-inflation environment. Therefore, they should be part of a diversified portfolio rather than the sole investment. Commodities like oil, gas, and agricultural products often perform well during inflation. Higher prices for raw materials benefit commodity producers, providing diversification benefits for your portfolio. You can invest in commodities through ETFs, futures contracts, or stocks of companies involved in commodity production. For example, the SPDR S&P Oil and Gas Exploration and Production ETF, XOP, or the Invesco DB Agriculture Fund, DBA, offer exposure to commodities without the complexities of direct futures trading. Cryptocurrencies like Bitcoin are seen by some as a hedge against inflation due to their limited supply and decentralized nature. However, they are highly speculative and should only be considered by those with a high risk tolerance. If you're considering cryptocurrencies, make sure they're a small portion of your portfolio, given their volatility. It's a high risk, high reward investment that might not be suitable for everyone. Remember, investing in assets like Bitcoin should complement a broader strategy. They are not a substitute for more stable investments like stocks, bonds, or real estate. Investing wisely during inflation requires a strategic approach focused on assets that perform well in rising price environments. Diversifying with real estate, precious metals, inflation-protected securities, and other inflation-resistant assets can protect and potentially grow your wealth. Thanks for watching the Economic Survival Guide. If you found this video helpful, check out these other videos for more strategies to help you thrive. Don't forget to subscribe by clicking the icon right here and stay updated with all our latest content. See you in the next one.